I'm Peter Bell, and I'm here with Mr. George Maynard from Ontario. And I have an introductory conversation here about George's background and involvement in Gossan Resources. Hello, George.
Hi.
So do I have all the details there right? You're in Ontario.
Yes, I'm a Quebecer by heritage.
That's right.
18 years in Val-d'Or.
And a second-generation mining guy as well, you mentioned.
That's right. Yeah, my father was with Texas Gulf.
Wild. And you've had
that was a big name in its day.
I spend more time reading about the old records in Arizona than I do in Ontario, Quebec these days. But you see some of these old company names that they just don't exist anymore. And
it's remarkable. Well, they keep turning over. Some of the names come back again too.
Yes, and get rebranded. Kerr Mines was rebranded as something else. They've got something in Arizona that's interesting, and
they've got a little deposit on some flat detachment faults. Yeah,
Copperstone, nice old open pit that they think they can go and generate some news and get back in production, I guess.
I think it was Kinross took about 500,000 ounces out of there.
Nice.
And that's been at the same stage for about 20 years.
Well, and that's it, right? How long some of these projects get stalled for, and how long some of these companies seem to end up on the trash heap, and yet sometimes they come back, and sometimes the stocks come back. See, Teck Resources from $3 to $30 a share last year to this year. Big move there, and a well-known name. But there's lots of other, stories out there like that.
Yep. Yeah. Well, sometimes they rename the deposits, but there's, gold is rare. That's why it's costly.
Well, and we don't like recycled projects so much. If they're just changing the name and trying to pull a fast one on some new investors, and if there's some fatal flaw, quote unquote, in the deposit or the project, that's not what I'm trying to get excited about.
Like a lack of water.
Or too much water, depending where you are.
Yeah.
So you worked all around.
I looked at that thing in Arizona in 1996. And
wow.
We figured we could get it into production. So that's coming up 30 years. People keep trying to put it into production.
Yeah, and I don't think they're there yet. So is that an exercise in futility, or?
It's not that hard to get something into production. All you need is miners. It's drill, blast, muck, and development advances. If you lose a day, you never get it back. But it's not that hard to do.
And geotech stability and stuff too, in that particular deposit, I've looked around at some of it, and no cave-ins, the pit walls, they're pretty steep, as I recall, in that one. But, no structural problems, or no, really.
Yeah, the deposits themselves are kind of flat lying, so that's it's if they're more steeply dipping, it's a little easier. You can have gravity move the rock for you. If not, you have to blast it and pull it out. So it's more expensive.
I wonder, underground mining versus pitting these days. Do you have a preference yourself, or is it really situational?
I like underground mining. Pits are cheap, but they have a larger ecological footprint.
Some of the pits in Nevada.
Yeah.
Some of the rock.
I don't mind high grade. Pits. I'm not fond of this earth farming, sub one.
Well, that's what I was going to say. I was going to say, these projects with these $5 blocks in their models, and you're dealing with $10 metal, and that's ore.
Yeah. And your biggest operating cost is your diesel bill.
Brutal. you know, I don't feel like those are the mines of the future.
It's easy to get through the low end of the cycle if you have high grades and good margins. These big pits like Detour, you get a frothy gold market, and you can make a bunch of money, but they're net down a few $1 billion there so far. That's pretty remarkable, but it is geared for when the gold price goes up, the Canadian dollar. But as we stand right now, we're almost $600 Canadian an ounce lower than where we were in August of last year.
Did it come off that far?
In Canadian dollars, yes.
Because I remember people were talking about like $2,400 an ounce, and here we are, $2,150.
Yeah.
Wow.
Yeah. Yeah. It got up to 27, I think.
Really? Oh, Canadian. God.
Yeah.
I must have had my fingers firmly in my ears at that point. Yeah, almost 2,800 there, August. Yeah, I know. I don't know.
So that's a big difference, eh?
That's a huge difference. Like,
for all producers, you got your, fixed costs and, Canadian dollars or pesos. Some of these international projects, the fascinating thing about them is if you can get a mine developed in a country and then have their currency collapse, you can make a fortune.
Oh, the tailwind, right? There's a bunch of Brazilians that seem to be
Brazilian.
That seems to be a thing in Brazil now.
Yeah, for sure.
Maybe Colombia, come soon to Colombia too, if they can get any of those mines built.
Well, there's lots of mines in Colombia.
There is. It's the history there is fascinating, right? Like one of the largest producers in the history of humanity, or something like that.
Yeah, the Segovia mine is a good one. And then there's another place up the road from Medellin called Remedios, which is like, you mine 4 or 5 foot wide. That's half ounce per ton. It's a good place. I had friends from Val-d'Or. Quebec went down there in the 80s, so they're still down there mining.
That's it. Lasting power, right? You find one of these things that works and you stick with it.
That's it.
So what about us explorationists who are always looking for another one? Are we running around making more noise than we should?
Your probability of success is fairly low. You can increase that by orders of magnitude of, looking in the Abitibi Greenstone Belt.
Yep.
That'll increase your odds by orders of magnitude. Proven areas, it's nice to have places you can drive to.
Yep. Yeah. Isn't that amazing? Talk of Great Bear, for example, as kind of a household name, I think, now in the last few years.
Yeah.
And a discovery just off the highway in Red Lake, of all places.
Mm-hmm.
How would that, I can just imagine geologists a few years ago saying, "Oh, he couldn't happen. Won't happen. There's not another big deposit. There's no big discoveries waiting."
Well, there was not. You can't find something unless you look. And they're going back and re-looking at some stuff in Newfoundland that's interesting now, or high profile. Anyhow, they've raised lots of money on it. Small, high grade vein type deposits. And those require some patience. And, we'll see.
Well, and one of the best lines I heard from a newfie out there was talking about the gold in the quartz is like smoke in the wind with some of those systems, and makes it really hard to define it. With a drill hole here and a drill hole there, you gotta Swiss cheese it, and really you got to get into bulk sampling type scenarios where you're getting.
Gotta go underground on it.
Yeah.
Yeah, vein type deposits are, you can drill them till you're blue in the face, but it doesn't tell you what's between the drill holes. And the other thing is, it's a lot cheaper to drill it from underground.
Yeah, I've been chirping a few people about that and being like, would you guys ever build like a shaft just to get down there so you can go and drill this thing off from down there? Because it seems like you're blue in the face trying to get at it from surface.
It's remarkable. It's remarkable now. It seems that everybody wants to have millions of ounces, from surface drilling. But, we used to go underground on, if you had 100,000 ounces, you'd go underground.
Yeah. Back when gold price was a fraction.
Well, it's a lot cheaper, right?
Well, and you get a lot more flexibility in terms of your orientation and your angles. Your development work underground is expensive, but when you're out there, you get, there's a 360. I don't even know how many angles out. It's a lot more directions you can shoot.
Yeah, well, you can figure that out with stereo nets. It's all you need is 3 holes into it. Or you can spend a ridiculous amount of money on an oriented core. I'd rather get more drill holes than rely on technology when the existing technology works.
What do you think downhole surveys, the imaging surveys, are those useful? I guess it's kind of redundant if you're drilling core.
Yeah, they're good for massive sulfides, conductive bodies.
Downhole EM then.
Yeah, EM, meso mass.
That meso mass stuff is fascinating. I heard somebody telling about it in a graphite thing in Quebec, and I hadn't ever heard of that before, but what a clever way to, with these stratiform things or like that, like the bedding. That's a clever way to track these things down.
Oh yeah. Well, you just put you can do it. We did it in Val-d'Or at Louvicourt. You just put 2 amp current in one hole, and you have a receiver in the other hole. You pull 2 amps out, and it tells you it's continuous.
Yeah. And so, what was that? What kind of a system was that you were drilling?
That was a Louvicourt massive sulfide deposit found in 1989. That was, 2 billion pounds of copper. Big discovery. Largest construction project in Canada in the early 90s.
Yeah. And millions of tons?
15.
Wow.
Ended up mining 15 million tons. Yeah, 4% copper, 2% zinc, 1 ounce per ton silver, a gram gold.
Rich stuff. There's so many questions with all that stuff too, right? Like, one of the things I always wonder about is like the size of VMS, and are you in the feeder zone, or are you out in the SEDEX part of it? Like,
well, there's distal proximal metal zonations. It's copper and precious metal rich right in the throat, in the center where the temperature is higher.
Yeah.
And then you have distal zinc. The metal zonation is fairly well understood. Zinc and
I
silver.
wonder about the size distribution of them too, right? Because like,
the size distribution. There's few over 100 million tons. There's generally one big one in each camp. Rio Tinto. The Iberian Pyrite Belt. Oh, that's a big deposit. I think that one's over 250 million tons. Kidd Creek's 150 million tons now, maybe. La Ronde is a good one. That's 50-60 million tons. It's known as a gold deposit, but it's a VMS deposit. The Horn mine in the Noranda camp was 12 million ounces of gold, produced from 60 million tons of ore running 7 grams, and 2.2% copper. So it was known as a copper mine, but it really the copper deposit was only about 12 million tons, and the rest are mining the gold.
And when they're into those kinds of numbers, are they getting all that tonnage out of the throat of the thing?
Yeah, the horn. Yeah, the horn is copper rich. It's about 500, 150 meters in diameter. 1/3 of it's chalcopyrite, and 1/3 of it's chalcopyrite and pyrrhotite, and the other third of it is pyrite. And it all runs gold, and the copper itself was running 12%.
Yeah, yeah.
You can make money. Base metals, if it's $1 a pound, that's $20 per percent. So copper now is $5 Canadian a pound. So that's $100 per ton per percent.
Yep. Pretty rich stuff. And maybe you lose some along the way to the smelter, recovery.
Yeah. Well, that allocation allows for metallurgical recoveries because there's 22 pounds in a metric ton. So
Yep.
20 pounds in. So I've already taken 10% off. So
StepPro, been watching StepPro Systems. They've got a YouTube channel. I've been watching some of their stuff on like gravity recoverable gold. Just interest there. And then something popped up about microwaving massive sulfides and some pretty fantastic stuff there, and causing microfractures around the grains and causing a bit of heat to go into them too if you want to do ore sorting on a thermal basis, and all kinds of wild stuff. It seems like there's hope for the mining business, right? Keep doing better, keep pushing the technological envelope.
Oh yeah, it's nice not to heat it, because then you get SO2 go into the atmosphere. Right? So it's better to keep it in sulfide form and send it to a smelter than to release SO2.
Is that the same as like cooking it? Yeah, because
well, smelting it, you're releasing it, but you can recover a lot of it and sell the sulfuric acid.
Yep.
And that's just for car battery. Well, it's basically car batteries. It's the electrolyte in car batteries. But yeah, you generally, sulfides create SO2.
Yeah, simply. How much chemistry there is in all this exploration and the mining engineering side of it too. Everything.
Well, the metallurgy is important. You have to be able to do it. And you have to be able to do it with proven technologies.
Yeah.
If there's a proven technology, then you can get the project financed. If you're trying something new, you won't get bank financing. Not proven.
There's enough risk. There's enough risk in all this stuff to begin with. Start adding in unproven new tech.
Well, you can try new things. There's some very interesting developments. Gravity recoverable gold. That's really interesting. People have been doing that since Jason and the Argonauts 6,000 years ago.
The fleece, the golden fleece. Apparently, there was a fleece was how they would get it out of the slurry or whatever. That was their miner's moss was fleece.
You put the fleece on the bottom of the sluice box to get the flour gold.
Yeah, that's right.
The fines.
And then they'd burn the fleece. I'd love it.
Yeah.
That's real ancient stuff.
Well, you can recover your amalgam through sheepskin, eh? So what you do is you twist it, and the mercury goes through the leather.
Yep.
and then you recover your mercury to use as amalgam rather than consuming it because it's expensive.
Whoa.
It's recycling. Chamois.
Wow.
Yeah.
Rather than burning it or heating it up.
Mm-hmm.
Wow. Okay. And the gold doesn't come through the leather grain.
No, you get your mercury back. It recycles it.
It's a little scary to think about the people out there who are handling mercury on a daily basis in this part of the world, that part of the world, right? Like
they used to give it to us to play with in school, when we were kids. It was standard science class, introductory to science when you're like 8 years old. Play with mercury.
The one kid who eats it. Don't, oh no. Oh God. Silly, right? And you survived. Amazing.
Yeah, we all survived. Most of us.
Well, and you know,
so what do you see in the marketplace? You're watching it all the time. I'm retired, so you know I'm following a few things. I've put some money into Gossan because I want to drill the Sturgeon Lake property.
Nice.
It's very exciting.
DMS camps.
Yeah, it's a proven camp. It's nice, coincident electromagnetic conductor and gravity anomaly. Gets up to a 1 milligauss anomaly. That could be big.
When I liked what I read on the website there about the last drill hole getting close to it, and then the subsequent survey saying, "Oh, guys, you just, hey, look, there's this gravity anomaly that you missed by however many 100 meters or something like that." That was one.
Yeah, it's an interesting overlay. It's hard. You got these little companies, and there wasn't much risk capital around since about 2013, and you've been passing the hat to friends and relatives just to keep the thing alive. When you mount a drilling program with a small budget, you're worried about the cost, and you can't. You want to raise a substantial amount of money and give it a fair test.
Yeah, you don't want to be bumping up on the budget constraint there.
Yeah, so we got new people in there, and the project's good enough to finance itself on its own merits.
Well, and on a focused basis too, right? Because that's looking at some of this other stuff and the stuff in Newfoundland that the company had there, and I talked to some of the Newfies I know, and they had been involved doing some of the work on the ground for the assessment credits out of the gate on those projects.
Sure. Well, most of the work was done in the late '80s by Noranda. They did all the tilt surveying and everything, and these discoveries came out of that. The Keats were working for Noranda.
Yeah.
And they found the old guy there found angular float that was high grade and angular boulders. And,
didn't go far.
His nephew and his great nephew traced it down. Took a couple of years, but they found the source. And that thing's it's small, but they've got a plunge on it, and they're drilling it, tightly. And that's a candidate that you have to go underground on.
Yeah, really, right? And I haven't heard anybody say arsenic encapsulation or refractory ore around that system yet. I don't think that's the case.
That looks
it's pretty clean. Yeah. Which is good because Newfoundland's had that problem, right, for a while. That a lot of the gold systems.
So these guys are going in there, and they're going to drill 200,000 meters, and that's what it'll take to trace these things, I guess. Or if if you can get confidence that you have, a certain number of ounces per vertical meter, you can go in and develop it.
But then there's all this, how many drill holes they have to put at what density to get the right tail. If it's a fat tail distribution and they don't want to use a top cut in the resource and blah blah blah, it gets to be a bit of an accounting exercise on the geotech, the geostatistics story. And you're like, what? Can we even answer this question really definitively just with exploration drilling? Like, production.
Well, you can get an idea from the distribution of gold.
Yeah.
So you can, develop a cutting factor.
Yeah.
People have been doing it for a while.
Yeah. I like some of the VMS systems in Newfoundland. There's one Burnt Lake, something like this, Spruce Ridge.
Yeah,
they had
Red Indian
one,
Lake.
Right? So
Buckins.
Yep, legendary stuff. And Buckins was just an open pit. I went and looked at that. I thought it was a big underground mine, but I guess they've been doing the underground development work there, Buckins Resources. But the history of that, it was a pit.
Oh yeah. You mine the initial stuff, and then there was about 5 or 6 mines underground.
I haven't been able to get a good 3D model or images of what the undergrounds look like in relation to the pit. But that's always one of the things that I like to do, is to take, the dimensions of an old mine and transpose them onto some new target area, and say, look, do we have the footprint?
That's a really good exercise.
Yeah.
That one,
and then do it on a 3D basis too. And to do it on a 3D basis, that's kind of beyond my technical skills at this point, but 3D leapfrog type model and to really take, what's the down dip extension and all these kinds of things.
Well, there's a CIM publication, which is basically the history and all the technical mining stuff for the Buckins.
Nice. Yep, I'll have to keep digging around on Google. There's so much information out there. It's sometimes hard to find exactly what you want when you're looking for something specific like that.
Well, that's a definitive reference.
Yeah, good. Some more VMS stuff in Norway too that I like. Old mines from 1600s. Permitting in the EU is always a bit of a question mark, but Norway seems to be open for business.
Yeah, the Trondheim district. Yeah, they're different. They're kind of like zinc and silver, and they're in basalts without felsic volcanics. So they're a little bit different, but they're in the kind of VMS category.
Yeah, this Beshi type, quote unquote.
Yes. There's Beshi type deposits in Newfoundland too.
And Cyprus, this Burnt Lake, I think Cyprus.
Yeah, there are Cyprus type deposits in Newfoundland.
GSS, the Sturgeon Lake. Do we have a category on that one? Do we know what kind of?
That's classic VMS, Kuroko, style. Yeah, associated with felsic volcanic rocks.
And how much is known about the camp around Sturgeon Lake? Not
an awful lot. It's had a fair amount of. It's actually had a fair amount of publications and studies, but it's you have to remain open-minded, and those studies are not very open-minded.
Yeah, some consulting geos, hey? It's a little scary. You bring somebody into your project and they tell you how bad it is. Hold on, what?
Well, these are people dealing with a business that has a very low probability of success. So what are you going to do to maintain your credibility? Be negative?
Yeah, conservative. Professionally
the odds
conservative,
are on
absolutely.
Your side. The odds
are
on your side, eh?
Yeah. There was a speech from 2017 Eric Sprott gave at one of these conferences. One of the few ones that ended up on the internet, published officially with him and all, and it was Conservatism versus Reality was kind of the title. And he talked about how, he's had instances where he's dealing with management who are accountants, or he's dealing with geologists who are, giving him a conservative story, and he's trying to tell them, like, look, guys,
it's high risk.
But there are some cases where we know enough that we can handicap the odds to say, look, I know you have to be conservative for your professional responsibilities.
It's high risk, high reward. Yeah. So you can't play the game unless you throw the dice. That's the ante.
Yeah.
But you can increase your odds significantly by going into proven areas.
Well, and when you're in situations where where things already, like, and you have a better handle on the odds, even at the deposit scale, and you're like, well, what's the next year's production going to be? Oh, well, it's going to be our life of mine average. What? Why? Is that a good estimate, or are you just, giving us some, routine answer? Are you really looking at your deposit, your ore body, and what it's?
No, well, that's an answer from a mining engineer.
Right? The accountant said to the mining engineer, you get and then you get these disciplines. These people may not be very good at talking across silos to each other or whatever, right? So one of the fun things about the juniors is that there's none of this. We don't have a lot of the same structures built up, right? We don't have the same degree of organization and people around. It's a much more wide open playing field.
Yeah, no, it's really interesting times right now. Looks like we're, there's money flowing into the junior export codes, and there's lots of work being done. It's good. You're going to get a whole new generation of discoveries or rediscoveries, redevelopments, and the odd new thing pop out.
Yeah,
it's exciting times. It's been so quiet for so long.
Well, and thinking back through your career, like, how many times have you seen this? Have you seen anything like this before?
Well, 2001 to 2011 was a pretty good boom. The gold price went from $265 an ounce to $1,900. That was a pretty impressive boom. The flow through rush going right up to the market crashing in 1987, say in 1984 to 1987. That was insane.
Money fights, more money getting thrown around than companies to take it.
Unbelievable. Everybody was driving a Cadillac in Val-d'Or.
Yeah.
We used to go to the bar called the Cabane de Mineur after work. So 5 o'clock to 7 o'clock, happy hour.
Yeah.
And all the geologists from 60 drills all around town would all go to the same place.
Oh.
Every day.
Eat your heart out, CEO.ca.
Wow. Yeah, two for one beer for 2 hours.
Oh, I bet there was a lineup for the payphones.
It's something to behold.
Imagine the rumors. Imagine the bullshit going around.
Well, there were some good discoveries. Casa Berardi was found. There's a few other ones that they're still working on today. New companies dusted off. We found a few. We sunk 5 shafts during that period.
Wow. And did you go along through production stage too? You're not just exploration guy? Like,
oh yeah. I build. I like to build mines.
Yeah. I wonder if that's a bit of a lost art. Yeah, really.
Well, it seems like it.
Would you build a mine by committee, or is it, because it seems like discoveries are kind of like a lone wolf type thing. Can't really have a discovery by committee, but building a mine's a different story, bigger price tags, a lot more people involved.
Yeah, it's not that bad. Yeah, it is if you make it that. Or you get the thing, or you go in and see what's in between the drill holes and prove up the continuity.
Yep.
And then it just flows to the next stage. Be able to mine everything out on paper and do a discounted cash flow. I've seen lots of discounted cash flows and life of mine plans, and none of them have worked. None of them have gone that way yet that I've seen.
Yeah, I think so.
Annual budgets. I've seen annual budgets come in pretty close.
But
vein type deposit.
Is it the ore bodies that throw curves? Yeah, I would think it must be the ore body that throws the curve, right?
Well, yeah. How do you drill off a vein type deposit?
No,
it's not. Well, I don't know. We look at Cisco's windfall.
Yeah, that's a chapter I'm not familiar with the history there, but I gather.
Well, they've been
heartbreak
drilling for 10 years or something.
Oh yeah, Cisco. Yeah, right.
Go mine the fucking thing.
Yeah,
but they are developing that, so that's good.
There was some jokes about this one on Twitter. They escape me now, but people joking about more holes and more holes and more holes, and just getting numb to the high grade headline news that they produce. And
well, you go to mine your ore body, and it's just a bunch of empty holes.
They should have been using smaller diameter drill core. Is that?
Well, they have to adjust their tonnage factor.
Let alone water.
Well, you have it. Water. I followed it. It's really good. It's going to be a good big mine. It'll be around. They've got millions and millions of ounces.
Yeah, seriously. Quebec seems to get it. Quebec seems to get it in terms of mining.
Oh yeah. There's good miners there. Yeah.
Ontario too.
I don't know. Well, the government here is big and cumbersome. It's hard for them to make decisions. Quebec is more proactive. They understand that mining jobs pay a lot of taxes.
Yeah. And you can't move the ore body. You can't take the ore body offshore.
Unfortunately, no. We went out of our area of comfort and purchased the Eagle River mine in 1994 and put that into production. So that's in its 25th year of production now.
Wow.
More
so where's that?
More reserves than it started with. It's 50 kilometers due west of Wawa.
Yeah.
On the north shore of Lake Superior.
Wow.
So we built that. We built that for $15.5 million.
No.
Rather than spending $100 million or $200 million drilling forever.
That's pretty impressive, George.
Yeah, so it's coming up on 1.5 million ounces of production.
Yep. And I'm looking at a chart showing the grade on the Wesdome website too.
Yeah.
Impressive.
We paid off
underground numbers.
We paid off that $15 million it cost to put it into production in dividends. We paid that back in dividends.
Yeah, and production hasn't ever really suffered too much either, right? Like it's been above 40,000 ounces for most of its life since 95.
Oh, yeah.
So what was that like? What was the discovery on that like too? Was it known kind of?
That one was actually discovered after the market crashed in 1987. So it was found around 1989, and it was a regional rush following the Hemlo gold mine discovery in 1983, and prospectors Peter Fertiber and Don McKinnon, they staked what they called the next nearest greenstone belt to Hemlo.
Yeah.
And it was $1 million staking job, and they carved it up into a bunch of properties and made a grand scale area play out of it.
Wow.
And it was an area that was very difficult to get into. The access was very difficult. It was basically helicopter access. There are very few lakes big enough to land a float plane on. And the surface discovery by prospecting and soil geochemistry.
Yep. And I'm reading about ore chutes at a spacing of 400 meters along 2.4 kilometers of strike.
Yep.
And then some post-mineral dikes cutting across, it looks like, to give some, I guess that's where the space came for the chutes to fill.
Yeah, it's an odd one. I shouldn't really talk about it because it's my former employer, which was a company I co-founded. But
wow.
But we were mining in Val-d'Or, a little company. We were producing about 8 to 10,000 ounces of gold a year. So we purchased the Eagle River property because we figured we could quadruple our production.
20 years later.
So we bought it in March of 1994. And we were underground in 95, first gold in October of 95, 18 months after buying it. And full commercial production as of June 1st, 1996.
25 years ago.
What's that?
Amazing. 25 years ago.
Yeah.
That's impressive.
It's nice. And there's lots more to be found there. You just keep following it.
The way it is with these things. And they can go down too, right? It looks on 1,000 foot level or something like that, it looks like. Yeah.
They're down to 1,000 meters, yeah.
Okay, those meters, yeah, thanks. It's a Canadian website, I guess that makes sense. Amazing how some of those vein systems, they keep going. One of the things in Arizona has kind of put me off with like all the supergene and how the oxidation is really important to the high grade. And then you come up to these greenstone belts and they're a bit simpler in a way, or they're more, they're a bigger prize maybe.
Yeah, well, there's been some very good ones. The whole Timmins Camp, Red Lake. These things are very complex, vein systems. And what happens is it's hard to get millions of ounces, but you go ahead. You got to go ahead, and then decades later you'll still be mining.
Yeah. One of these situations where it's had 5 years of mine life for the last 20 years in a row.
Yes, and then an open pit, has, it's limited by the stripping
very
ratio.
Different.
Yeah. So your future is going down.
Co-founded what is now Wesdome in 1994, Conrad Hache and Marie Pollitt.
Yeah,
Amazing.
we bought it in the Morocco Club in Val d'Or.
On a napkin.
Yeah, no, all our deals were bar napkins. Yeah. Yeah, those were the terms. And no feasibility studies either. We never did a feasibility study. We didn't believe in them.
How much drilling did you do? Exploratory drilling before you started?
We did. We just did some infill drilling to get the stopes off the first level. So very little. There was
really?
300. There was 305 holes drilled by previous operators, and underground access established.
Oh, okay. Okay, I got you then. Yeah, sure.
Yeah.
How far? Had they built a ramp down to the first level, or?
Yeah, a ramp down to 100 meters, 120 meters. They had a level at 140 meters, 120 meters, and 100 meters.
Oh, it's was that asset on the garbage heap there when you picked it up? Would you say, or?
Well, it was Noranda Group or Wesdome Gold Mines, and they determined it wasn't big enough to have an effect on Noranda.
Yeah.
So therefore, it wasn't worth the risk. But for us, it was an opportunity to quadruple our production.
Yeah. Yeah, there's a lot of that in the mining business. Hey, these level up, level down situations where somebody casts something off or somebody picks something up because it's not the right size of opportunity. They got to get that matching.
Well, Agnico Eagle's done a very good job of picking up things that weren't big enough for the other companies and just aggressively exploring and drilling them, making them bigger. They've done a wonderful job at that.
Well, and keeping the corporate culture together, I think, has got to be a problem or a challenge or something too. Being there at the early days and
well, you get the investment community basically pulling levers and influencing people on their technical decisions.
Yikes! Which
is because they're looking for things with certain investment criteria as well.
Yeah.
We want 1 million ounces, and we want this level of production. And so by the time the 90s came around, what happens was everybody was looking for the mythical deposit that would produce 200,000 ounces of gold.
Yeah.
And,
20-year mine life.
Yeah.
Lowest quartile cash cost. Okay. Yeah.
Yeah. So you just run around the world turning things down, because if anybody has something like that, well, there was a rule. It was 222, so it was 2 grams per ton. Can fit 200,000 ounces a year. Yeah. So you just so there were all these people traveling around the world turning things down. Well, if you have a good deposit like that, it's not going to be for sale.
Yeah, exactly.
So you may as well go and find your own.
But then you're up on the long odds of greenfield exploration, unless you humble yourself to take somebody else's half-eaten sandwich and keep going on that.
And drill it out, which is what Agnico Eagle did.
Agnico Eagle, that's right. But it seems like their corporate DNA has a pretty hungry attitude. I heard the stories of the chairman running around with stock certs in his briefcase, selling stock to people in the airport, never waiting for a flight here and there.
Golf course.
Yeah, that too. I'm sure.
Giving out silver samples on the golf course. Yeah. Yeah, he was a funny character.
gold. Something about gold and mining, hey, it attracts these larger than life people selling these big dreams. I wonder.
Oh yeah,
it's
fascinating stuff.
Well, and you've traveled around the world, right? So you've seen this in a bunch of different places. Is that kind of a common denominator? Would you say, is it gold mining attracts characters?
Oh, yeah. Well, definitely. You got to be a dreamer.
Yeah, simply.
It's one of the few businesses where a small out of pocket investment can generate a windfall. That's got to be attractive.
Totally, right? It's the tech entrepreneur of the 2000s and the 2010s and 2020s here, in the 90s.
That's it. Anyhow, there's lots of potential out there. I'm not following a lot of it. I'm retired,
yeah.
But yeah, you can't get away from it entirely.
What did you think about the M&A, the mergers there in 2019?
They're starting again.
Yep,
yeah,
they are. We've seen it. Yep, and some activist investors making some noise as well too.
Yes, that's the discovery rate is way down because of very active investors.
Still cheaper to buy ounces than find them.
People are kissing the capital market's ass instead of going out and finding more deposits.
Well, what's finding costs? What are finding costs these days? What are timelines, to production on a new discovery? Anyways, like it seems like.
Oh, geez, it seems awful long.
Right.
Unbelievable.
Why start this thing? You're not going to see it through. It's a different era from, 1994 even. Doesn't seem that long ago, but.
Well, you got like 6,000 years of gold mining history.
Yeah.
No, why does it have to take so long?
Yeah. So is Canada, have we caused ourselves some problems? Or are we in our own way?
Just in the last 25 years.
Yeah.
Yeah, you have the capital markets people, like the institutional investors and everything wanting to call the shots.
Yeah. Yeah. So that they can, for their own, for whatever goals they have, it's a market goal, not a producing metal.
No, it's because they're experts. And the only reason they're experts is they're in the money management business, and nobody's going to give them their money to manage unless they're an expert. So therefore, everybody in the business is an expert.
I can't imagine what it was like when he financed that Eagle River project way back too.
Well, we used to have people come in and they say, well, first let me tell you a little bit about myself. And there's like a 25-year-old kid there. He's solved all the world's problems, and now he's moving on to mining. He asked you to come in to tell you about your project, and he talked about himself until the next meeting. So.
If there is the next meeting, George.
So what basically happens is that the timelines are affected by the amount of people talking about their expertise, and they're in the capital markets, and they haven't worked in a mine.
No,
they don't know who to phone to get a drill.
Yeah,
they don't know the drillers. They don't know the miners, but they're experts.
Well, and does that crowd out the little guys? Does that mean that it's just for the big companies to run this, like, I don't know if they're running it like a utility or a monopoly or what kind of word you want to describe it, but does it crowd out the room for the smaller players?
Well, there's different layers to the business. There's the miners, and then there's the junior explorcos, and it's a completely different business. There's 2,000 or 3,000 junior explorcos that want to find something and sell it to somebody, and make money quickly. And then it's like a series of concentric circles. So in the middle circle is a smaller diameter, and in the core of that you have people that are producers that are generating money, and that supports the capital markets, the service providers. It's all a series of concentric circles that get larger and larger and larger in diameter. And the larger in diameter they have, the more experts they are. And they're further and further away from the core capability of mining for profit.
Yeah. I think about that stuff. It always makes me think about the junior mining business in terms of like generating news flow. We're not producing metal here, but if we can produce news flow, actual exploration results, like, they're producing something worth talking about. And
well, you can get to the next financing.
With your head held high, at least, it's something to talk about. Not having to say the same old story to the same guys who didn't like it the first time.
Well, I think the problem the issue is there's more good ideas that have a low probability of success, but the successes can be spectacular.
Yep.
There's more good ideas than there is risk capital to fund them. Yep. So what you're seeing is people that truly believe in their good ideas, which could be the big one, competing for a limited pool of risk capital. Now, in order to test your idea, you'll have to be more aggressive in your marketing and projections just to be able to compete for a limited pool of risk capital.
Well, and maybe you have to explore it in a way that you wouldn't otherwise do if you weren't doing it for the short-term audience.
Exactly.
Blah, blah, blah.
So what happens, because the promotion is so competitive for a limited pool of risk capital, the expectations that are created are higher than what could be fulfilled. And it leaves a bad taste in people's mouths, and then risk capital becomes slow for a period, and then somebody finds something big, and then that captures everybody's. That reinforces that it's a high risk, high reward game, and the successes can be spectacular, and then people start putting money into the risk capital markets again.
The cycles in all these natural resources stuff, just amazing, where we see them all. And in markets too, it's fascinating stuff.
There's the commodity price cycle, and then there's the greed price cycle. You know what I mean? And they one or the other turns around every now and again. You get them both going at the same time. It's
every once in a while they do. Yep.
Yeah, and if you
and almost absolutely, and that could have been the case last year. I felt like the greed cycle was there and the price cycle was there for these metals. But then what happened? Oh well, COVID and everything's shut down, and we can't where the drill crews and the assay labs are backed up.
Yeah, I think that just helped the greed, because people just sat around. And there's greed. Greed is back. It's great. Yeah, love it.
But it hurt the results. It hurt the delivery of the exploration results, because everybody was slow, and then people had been waiting, and they didn't realize it was going to be so disappointing in the first place. And
Yeah, well, it requires some patience. I don't have much.
Well, that's good. I said for a few years I was a patient speculator, and then it occurred to me last year sometime I was like, hey, maybe it's better to be the impatient speculator.
Yeah. No, you want it now.
You want it now, George? Come on, man.
That's easy to sell, and that cycles right into your news flows. People want more information, more.
Well, and does that change for you now that you're retired and stuff, or make it even more so?
Well, we were really lucky with Wesdome, because we didn't have to go to the market because the thing was making money. So I worked there for 23 years and we raised money twice.
At the top each time, I'm sure.
Yeah, once to get it going, and then we sunk a shaft, and that was when the gold price was $265, so we needed a bit of money for that.
Yep.
But what people collectively call the mining business is basically running around to all these conferences and everything, shaking down institutional investors for selling stock. You know what I mean?
And then finding retail to buy it back in the market, whatever comes out.
Getting your story out,
Brutal.
Yeah, well,
and not advancing the story. A lot of these stories, they don't advance far enough to even be worth telling and retailing.
People call that the mining industry, but what it is it's the competition for risk capital by explorers.
Yeah, mining the market.
But they're not. Then you have people that have been, they've got 30 years mining experience, but they don't have 30 years mining experience. They never worked in a mine. They've got 30 years competing for a limited pool of risk capital with exploration ideas.
Yeah. There's been some instances where I've seen some supposedly well-experienced guys and doing things, and then you check out the details of what they're doing, and you got young guys who've apparently got more time on a rig than they do, and pointing out the mistakes they made here and there and everywhere. It's like, oh boy.
Well, you just look at you look at people's in this competition for a limited pool of risk capital. You just look at people's biographies that are, posted on the internet and, in corporate presentations, Like I've seen 6 people I've never met in my life say they found the Louvicourt mine. I've never met them.
And they weren't there.
You know what I mean? Well, yeah, I never saw them in that swamp. So the embellishment of one's accomplishments is.
Yeah. Where's the 43101 on that side of the business? Hey, we're so nitpicky on this detail and that detail. But where's the real stuff where they're sneaking stuff in right with that? Like, oh yeah. So I guess you get to be choosy what you get involved in now.
Well, everybody's promoting their management, because that's one of the slides in the corporate deck, eh?
Yeah.
Yeah, so you just make make it sound better than it was, I guess. If all these people were so great, the price of commodities would be lower because they would have found a whole bunch of deposits.
Yeah. I saw one that discovered something that was a mine 200 years ago. Okay. Discovered, huh? What does that mean?
Anyhow, it's all news flow. And getting the stock up for the better good of the great idea.
Yes, and some of these ideas are worth it.
Oh yeah. There's some great ideas out there,
and some of them mint money too. Like talk about Eagle River. I don't even know about Louvicourt. Like the production history on that, but
well, Louvicourt, we had that was Ore Resources. So we had like 50 million shares outstanding. And we split the stock to 100 million. And then it got about 10 years after the discovery, it got taken over by Teck for $45 a share. So that would be $90 a share pre-split. And the IPO was at 117 in 1982, $1.17.
Big return.
That's a good one. The one I play now, I've actually bought some. I didn't really participate in the gold rally last summer, but I've recently bought a bit of gold stocks. It's I feel the problem with gold is we have these vaccines popping out all over the place.
Chaos all around the world. No shortage of chaos and things happening, right?
That's it. That's it. Maybe gold. I don't think gold is dead.
No.
Yeah.
It never. That's part of the point of it, right?
But it's sold off. So.
Yeah.
Anyhow, I've bought a bit of gold lately, so I'm hopeful.
Watching all those majors go through it all the last few years, and it made me thinking about options on some of them and the returns. You can get the junior stock type returns out of options positions on the majors, and have relatively liquid.
Oh yes,
you
yes.
can have a more liquid market on the options than you have on your junior mining stock to begin with.
Yeah, I've seen that game play out over the years. One year at the Prospectors Convention, Lac Minerals. It was March. Yeah, first week in March. So Lac Minerals Superior Court came down and said that they don't own Hemlo Gold Mine, and they had March 31st options.
Yeah.
That were, I think they were puts.
Oh yeah.
Anyhow, they were selling at 10 cents, and when that news came out, it went to $40.
Boom. Yep.
So 10 cents to $40 basically overnight.
Mm-hmm.
That was a good one.
If all the gamblers who just want to have market action just stick to the derivatives, is there an audience for exploration funding?
Well, the problem with derivatives is they have a term, eh?
Yeah.
Yeah.
Well, so do junior mining stocks in some way to some people too. They hold them 4 months at a time.
Yeah, they do. What I like, my old rule for junior companies is, if they get listed, then what happens is so if you get in on a seed capital financing at 10 cents or something, what would happen is over the life of the company, the stock would go to $1 before it would be consolidated. Now it's a little bit different because there's so many, 5 cent to 20 cent stocks, and there's anything from 50 cents to $1 is kind of like a blue chip,
Terrible.
But this is.
Have you been to Australia? Have you seen the Aussie markets?
Well, I played the Australian markets in the 80s, and so Canada's become Australia.
Yeah, we're on our way for sure.
Yeah. They used to have 5 separate stock exchanges, and it's all wrapped into one now. But I played it, and it was all 5 cent stocks. A major company would be like $2 stock, like BHP.
With 1 billion shares out.
Oh yeah, billions and billions. And then they could never sell stock to put a mine into production, so they'd have to get financing with terms on hedging their
Yeah.
gold.
Yeah.
So that was why we had all these bad hedges, But not in Barrick. Look at Barrick. They're $9 billion underwater on their hedges when gold went up to $1,000. At $1,000, they were down $9 billion on their hedge position.
Yikes! I'm amazed.
Yeah, 9 million ounces at $333. That's what they had to deliver, and the gold price went to $1,000. So it's 9 million ounces. So when they closed out their hedges when gold hit 1,000.
Uncle.
So they lost $667 an ounce on 9 million ounces.
Why that?
Yeah.
Why? Any idea why they sold so many ounces forward?
It's kind of interesting. What they're doing is at the time, what happened is it wouldn't show up. You didn't have to sell stock in order to for capital to build a mine. You see what I mean?
Mm-hmm.
So what you could do you could do it through gold loans. And then what happens is you didn't have to account for it. And then in 2008 you had to account for it. It was the SEC changed their rules. You had to do a mark to market on your derivative book, eh?
Yeah.
And that's why we had the global financial collapse. So the global financial collapse was based on people having to mark their derivatives. It was an SEC policy coming due in December. And so the financial markets collapsed in September, October due to a change in accounting policy.
Yeah, and they took away Glass-Steagall a few years before that, so the table was set for a problem like we had never seen in 100 years.
They took away Glass-Steagall to try to deal with it. Oh, yeah, it was before. Yeah, that's right, Bill Clinton.
It was before. I think it was Clinton or something did that.
Mm-hmm. Yep.
The financialization, weapons of mass destruction, financial destruction, or Buffett calls them.
Derivatives. Yeah.
Scary stuff. And we're seeing now, even in markets today, right? There's news of some big Japanese entity taking a big loss and all this kind of hidden risk on the street.
Credit Suisse is in there too. Credit Suisse, $2 billion they lost, they say today.
My favorite, I saw somebody, they were like, official stats show $800 billion in margin debt. And this one office had $50 to $100 billion that nobody knew about. What? Like, hold on. What are you talking about? It's like, well, yeah. Do you trust the official statistics? Like, come on. What do you think about their inflation numbers? Like, all that gold bug chatter is going more mainstream than ever before, I think.
Well, the inflation's in the stock market and the housing market.
For sure. And lumber price everywhere. Yeah. It's
no, but like how much of the economy is the stock market and the property market? It's a big chunk of the economy, eh?
Yeah.
Yeah, so there's inflation.
Oh yeah. And all around the world too. That's the things about copper, right? Is Dr. Copper, Global Economic Barometer, real important bellwether and stuff. And I was always fascinated by markets, and then start to learn about mining and gold and copper and how important those are for reflecting a lot of world events.
Well, what it does is it supports modern society's lifestyle. Like I'm sitting here talking on a cell phone. The cell phone. You know how much gold there is in the cell phone? 85 grams per ton. 85 grams per ton. It takes a lot of cell phones to make a ton, but they're getting heavier and heavier with the batteries, eh? So it's 85 grams a ton. Hey, imagine no cell phones,
So, gold demand, all commodity demand all around, right? It's not.
What it does is it supports a ridiculously consumptive lifestyle of wealthy people that live in New York and complain about mining in the Sunday Times editorials.
That's a problem. That contradictory stuff.
It gives them enough time to a lifestyle where they have enough wealth and luxury to be able to have time to opine on issues that support their lifestyle.
Well, and that's, broad strokes of history, that's a trend that's been picking up steam for a long time too, right? Like increasing leisure hundreds of years. But like, I look at that, I think, okay, opportunity to do better, an opportunity for Canada and for companies I'm involved with, right, to be, involved in the best new projects, right, and showing that, whether it's exploration, discovery stuff, like try and do that in ways that has a positive impact, however you choose to measure it. It's a complicated conversation, but it's pretty clear. You can tell if you're doing something wrong, I think.
I think so.
A bunch of ways.
Yeah. It's just you can get a little cynical about it.
Yeah. But it's so funny because these cynical gold bugs are the same guys who turn around and invest in dreamer exploration stories. So it's like, which is it, guys? Have we made up our minds yet? I don't know.
Well, I just took the extraordinary step about 4 or 5 years ago of stopping gambling because I had enough after a whole career of gambling, and I found that was incompatible with enjoying myself. So now I'm gambling with a bit of it. Yeah, because it's very interesting. You got to dream, eh?
Did you ever, what was it, like other people's money? Did you ever find that it was different? Did you like to do stuff more with your own money versus some anonymous bank, treasury, corporate bank account, or where did you, find yourself in terms of responsibility for where the money came from?
OPM or other people's money was a coin from Norman Keevil Jr. when they found the Casa Berardi mine in 1982. And it was found with flow-through, so that's OPM, other people's money. Yeah.
The flow-through bubble.
Yeah.
But what, a lot of gamblers, like, they like playing with house money or something like that, but.
Yeah, that's what I'm trying to do.
Yeah.
Yeah, I'm arbitraging dividends now.
Yeah. Well, just as long as you're not out there trying to hustle suckers or whatever, because that's a part of the gambling community too.
Well, it's just because I have some capital together.
Yeah.
So
well, and it's amazing how much, and how much impact you can have. I started talking to some prospectors in a few different places, and you look at the budgets on what they want to do and comparing that to how much you're investing in some of these public companies and how much is getting done when you put money in there. And wow, the actual field work on a lot of these projects is pretty low compared to what these public companies raise. That was a wake-up call for me, where it was like, look, you can get a bit closer reaction.
You can make really good money in exploration and mining companies.
Yeah, in the private side.
You just have to pick the right ones, Peter.
Well,
there's ones you can pick because there's like big personalities that are quasi scrupulous, and just because of the name, the stock's going to go up.
Yeah,
you know what I mean. You can play that.
Well,
you go,
and it's the same thing with the hanging out at the bars back in the day with all the drillers.
This guy's a really good liar. His track record is zero, but he's really good at lying. You can make money on him.
The stock will go up. We know the stock will go up here. So.
Oh yeah.
it's funny, I think about you guys at the bar there with all the drillers these decades ago, and then I start to see more and more people post.
That was like real genuine inside information.
Totally. Yeah, and I look now online and I see more and more companies posting pictures of drill core, programs that are ongoing. And it's like somebody took a piece of core from the rig to the bar that night or whatever. Hey, we just drilled this today.
That's amazing. Yeah.
That kind of stuff still goes on.
Oh, yeah.
Not surprising.
Okay. Well, I just about talked sense into myself here.
No, thank you. A real treat, just to talk to you about your experience. I grateful for the chance to get to know you a little bit and pick up some more bits and pieces.
Well, we're gonna try to pull a rabbit out of our hats on this gossip.
I know you are.
Yeah.
Because are you involved in any other public companies, or is that's the one?
That's it. Yeah, no, it's I got asked to go on the board of directors, and but you can't really do anything on the board except hold management accountable, eh?
Yeah.
You know what I mean? Like, you're not managing it or anything. But you can influence management, and I think we have a pretty good team and good property. The other assets of the company have been accumulated over time, and they have some merit. But I want to drill Sturgeon Lake and not do it on the cheap. Do a good job on it. Answer the question instead of having to go back,
10,000 meter drill program plus.
Well, it's all there's massive sulfides there. It's just a matter of whether they're pyrite and purite or chalcopyrite and sphalerite.
One way to find out, right?
Sulfides or ore sulfides.
Yep, that's right.
But there's a lot of them. That's a big gravity anomaly.
Well, and that's why, and sometimes trying to eat an elephant, or something like that. You got a lot. But again, this is a situation where you're kind of on second base already.
Oh, yeah. No, that's drill-ready project. It's not years of field work in order to bring it up to the drilling stage. It's all ready to go.
Yeah, pretty cool to see you get involved, especially with new CEO, first time CEO here too.
Sam seems like a really nice guy. I like him. He's pretty sharp.
Yeah. He's pretty quick.
Have you known him for a while?
Nope, just since maybe December last year, 4 months going on.
Yeah.
And showing him some stuff in Arizona, and he was one of a very short list of people who, got it, and he probably got it better than anybody else. So I got a lot of respect for him in terms of understanding risk reward.
Yeah, he's very sharp, and when he speaks, everything is well thought.
Yeah.
Out that he says, that's a good analytical mind, I think.
Good corporate face,
Yeah, and he's plugged in, he's run funds and stuff, so he knows that side of the business.
Well, good to have, sometimes these market guys, these finance guys that come in, and it's really important to have operational, real mining experience in the mix.
Yeah, well,
I
think with our board, with the board and the management, we kind of have the bases covered. Now yeah.
I wonder, will we see you out at site? Are you chomping at the bit to get out there?
Well, yeah, maybe I'll see what happens, I usually spend my summers in my where I come from in Quebec, which is a small village. But yeah, I make it out there this summer if they allow us to travel and everything.
Well, yeah, this is it. Who knows? Things getting bad over here in BC again. Gee, you had a wide open spring break and then back to chaos. Okay.
Yeah, well, yeah, I don't know. I'm getting tired of this thing. I hope it would just go away.
Doesn't seem like that's going to happen.
No, it just seems to be morphing. I guess it'll be like influenza. It'll always be around with new varieties popping up, eh?
Well, in broad strokes of history again, too, right? 1918, 1919, that was a couple years of things getting shut down in a major way. And then roaring 20s and then dirty 30s, and where are we in all that? How does that get shuffled up? How much of that do we repeat?
We're just coming into the roaring 20s.
We could be.
We got 10 years.
We could be. Can you imagine?
Yeah. Just turn conservative in 9 years, will you?
Yeah, call me the day before it happens, right?
Cash out. Yeah, right. buy big brick of gold and bury it in your backyard.
The midnight gardening is more of a liability.
Okay. Well, yeah, let's 10 years from now or 9 years from now. You got to take a little bit out every now and again, eh?
Yep. Anybody listening who's not aware of that, please listen to what George just said. You got to make sure you pay yourself if you're doing this high risk stuff. Got to take some.
When I was studying, or you put it in utilities and dividend paying stocks, eh?
Yeah.
And then you just gamble with your dividend income.
Well, that's it. And use it to fund exploration drill programs or prospecting programs. Like, hello, yes, please.
So when I was studying mineral economics I studied at Queens and McGill, and there's a principle that a risk theory that underlies mineral exploration and mining, and you know what it's called? The theorem?
Nope.
It's called the gambler's ruin theorem.
Yeah.
So what happens is you have a stake of chips, and it declines and declines and declines, and then you make a big strike, and it replenishes, and then it starts declining again. And this is that your assets are depleting assets. So anyhow, it's called gambler's ruin theorem.
I know. I've seen it up close and personal in my own investment accounts. George, I've seen it. It's terrible. I hate it. The antis, right? One after another. Oh God.
So that's the theorem that governs mineral exploration or mineral economics.
Yeah, for the people underwriting the programs, it sure does. It's a sure way to barbecue a bunch of money. But then you get some high grade hits, and it's a different story, and you get the market behind you too, and all of a sudden something's going into production.
And then it's like a drug too. Once you start using it, you can't stop. And it's full of fascinating characters and dreamers. dreamers and schemers.
Schemers. Well said.
Okay, I'll let you go.
George,
I'm running out of beer.
George Mannard,
go downstairs to the beer
Director
fridge.
of Dawson Resources. Hey, pleasure to talk to you. Thank you very much.